The Airbnbust is upon us.
Is Airbnb about to collapse? So far,
yes, the Airbnbust is real.
We're talking about how horrible it is to be an Airbnb manager or investor, how everything is plummeting, nobody's getting bookings, it's doom and gloom, it's basically the apocalypse for Airbnb.
I'm not going to sugarcoat it, you guys. We lost money. It's not looking good.
And this has been the primary fear for the last few months, and it's brought on a tsunami of different complaints from across the US, mostly from other Airbnb hosts, and some speculators repeating basically the same thing, which is an occupancy quote-unquote drop-off.
Airbnbs, or the people that are investing in Airbnbs as an extra source of income, are suffering.
And a general trend has been his occupancy's been coming down. So the average host is getting a bit fewer bookings than they were getting in 2021.
So now we have this oversaturation of these short-term rentals, and the people who invested their money in it, hoping for some passive income, aren't getting it. They're not getting any income right now.
But in this video, we're going to use data to address if the Airbnbust is real or just hype. Data from around last September shows that the nationwide US occupancy rate was at 58.1%. That's only a tiny 1.2% drop from the same period in 2021. And it still exceeds the levels seen in 2020 and 2019. In fact, occupancy is actually up by 11.1% compared to 2019 levels. And the good news is demand for short-term rentals is actually up. More and more people are actually wanting to stay at Airbnbs. In the third quarter of 2022, demand for short-term rentals was at 24% year-over-year growth. And AirDNA says that demand is expected to grow further by 9% this year. So what's causing this reported dip, you ask? Well, we know now that the pandemic years of 2020 and 2021 were especially good years for the short-term rental industry. More travelers favored Airbnbs over traditional hotels for obvious reasons. They also started going to more rural and remote locations. But things are shifting now. Travel restrictions have been lifted, people are heading back to the cities, and more people are flying internationally now. And to top it off, there is an economic slowdown. So what other factors are really causing this slump? Well, there's a host of them, and we're only going to be mentioning a few of them. Number one, seasonality. Hosts who saw their incomes dip felt the pinch around the times between August to October, which is generally the slow season. Number two, tourism recovery. The pent-up demand and travel surge in the past 2 years has really kind of tapered off. Travel patterns are now going back to their pre-pandemic flows. Number three, Airbnb regulations. Some cities are passing new regulations that are making it more difficult to allow short-term rentals. Number four, algorithms. Airbnb recently tweaked their search rankings to prioritize listings that are all in pricing and best value. Number five, last-minute reservations. Don't forget Instant Book. More and more people are using this feature to be able to book last-minute trips. Number six, guest complaints. Guests are turned off by the increasingly higher rates, mostly due to hidden fees. Airbnb has been trying to clean up the bad reputation that's been made by making fees more transparent. Just because the nightly rates are more transparent doesn't mean that the places are any cheaper though. Instead of having an itemized list of what you would have to pay for, now there's just one big payment that people have to pay for. Number seven, case-by-case issues. Lastly, it could just be an oversight as the host or property manager. Maybe they're not using the best pricing strategy. Maybe they need to add new amenities. Maybe it's time to upgrade their properties to make them not look so generic and make them stand out a little bit more from the crowd. Now, there's a lot of different reasons why hosts are seeing a slump, but what all the experts agree on, which is the number one cause of this decline, is oversupply. In fact, as of September last year, an overwhelming 54% of active listings were added to the platform since 2020. AirDNA says that there were more than 70,000 listings in September alone, and that's the fifth consecutive month that they've seen these numbers. So what can anyone expect from an oversupply? Of course, increased competition. In fact, analysts say they expect occupancies to continue to dip this year because even though the demand is up for Airbnb stays, the bookings will just be spread out amongst all of the different listings, which simply means there's going to be fewer bookings for every property. So are we all in trouble? Well, of course not, because it really just depends on what market you're in. As people like us in the hospitality and real estate business know, it's really all about location, location, location. As always, you have to consider the supply and demand dynamics in your area, because occupancy will always fall when supply outpaces demand. And that's exactly what happened in the third quarter of 2022 in the top 50 US markets, except for coastal resorts and ski destinations. So if you happen to have a traditional vacation rental, then this does not apply to you. Hosts with properties in places like Telluride, Aspen, Vail, and Breckenridge, Colorado didn't have any problems with vacancies. Neither did hosts in Destin and Walton Beach, Florida, South Padre Island in Texas, and the Outer Banks in North Carolina. So what you can do if there's an oversupply in your area is consider decreasing your nightly rate by 5%, and you might still be able to retain your occupancy levels the same. That way, you'd only be really losing 5% of your revenue. Or you could maintain your regular rates, or even increase them a bit and only lose 2 or 3% of your occupancy. If you're using dynamic pricing, then you don't need to worry about these numbers because it'll do it automatically for you. I'll include a link to one of our favorite dynamic pricing tools in the description down below. But these are just recommendations that the folks at AirDNA are suggesting that you do. Okay, now to give you a better picture of what's really happening in the macro level, let's take a look at some important data. Number one, how many people are actually joining Airbnb? Well, as of 2022, there were over 4 million hosts on Airbnb and 7 million listings worldwide. In the US, available listings reached 1.38 million. That's up 23.2% year over year and an 8.7% increase from 2019 figures. According to data company iProperty Management, some 14,000 new hosts were joining the platform each month last year. Data from Airbnb also shows that 75% of new listings were snatched up by travelers at a faster rate than they were a year ago. Number two, how many people are staying at Airbnbs? As of the second quarter of 2022, Airbnb already broke its booking record when it saw 103.7 million stays, including experiences. By the third quarter that year, the number of booked nights and experiences rose by 25% from the same time in 2021 to nearly 100 million. Worldwide, guest arrivals exceeded 90 million, which is another record for Airbnb. Airbnb's revenues have also been breaking records too. In the third quarter of 2022, the company's revenue grew 29% year over year to $2.9 billion, which is the highest quarter in all of its history. Consequently, profits was also at an all-time high. Their net income was reported at $1.2 billion, up 46% from 2021. Number three, how has travel actually been the past year? AirDNA says that the vacation rental space enjoyed unprecedented popularity since the COVID-19 pandemic. But even after travel restrictions were lifted, demand for short-term rentals continued to grow. In 2022, demand rose 24% year on year and sits at 26.6% higher than it was in 2019. Nights booked for future travel were up 19.3% year on year to 15.8 million. Number four, how are hotels affected in comparison with Airbnb? Like we said earlier, the short-term rental industry hit a gold rush during the pandemic. While hotel occupancy across the board fell 77% at the end of March 2020 compared to 2019, short-term rental bookings dipped only 45 to 46%. By August of that year, Airbnb properties were already in recovery mode. And by contrast, it was only in 2021 and 22 that the hotels started to recover, and they still haven't even fully recovered to this date. Right now, according to one report, short-term rentals are seeing a 96% increase in occupancy compared to 2019, but hotels are seeing a drop, and that's according to hotel industry sources. In terms of market size, Airbnb hovers around $4.81 billion in revenue, while the global hotel industry has over $600 billion. While we're comparing Airbnb to hotels, let's also compare their potential growth in the coming year. The forecast for hotel demand this year is a 3% growth with a possible recession already factored in. Demand for Airbnbs, however, is projected at 9% growth. So that's a pretty big gap, and Airbnb is still in the lead. Number five, what's going to happen to Airbnb and short-term rental hosts? Well, Airbnb is unfazed by claims of any so-called Airbnbust. Brian Chesky remains very optimistic and is even encouraging more hosts to join the platform. Of course, that's to be expected. He is Airbnb after all. But what do non-biased observers have to say? They say the short-term rental industry is a very resilient industry. It's able to weather economic, social, and political uncertainties, just like we saw during the pandemic. The occupancy forecast for 2023 is predicted to continue to dip to 56.4%, but that's still significantly higher than pre-pandemic levels. And if there's going to be a recession, Oxford economists say that the accommodations will be one of the least affected. AirDNA expects it to be more of a goods recession, not a travel and hospitality recession. People are and still will prioritizing travel over other forms of spending. And there's even data to show that from the previous recession that accommodations was one of the quickest to rebound. So with all of that data, we can now face this year with a little bit more optimism. But cautious optimism. Because as demand for Airbnbs is expected to grow, there will also be more supply. But VRMA, the Vacation Rental Management Association, says that the rate of supply growth will eventually slow down. Fewer people will be purchasing rentals because cap rates will be falling. And lots of casual, speculative investors are expected to leave the platform as they realize that Airbnb is not for them, so they'll start selling off some of their portfolio. So what does this all mean moving forward? Well, we have to watch the economy and pay attention to supply and demand. We have to study the local market data, and we have to add more value to our properties. If it means installing a hot tub, purchasing a piano, creating a game room, or even adding a pickleball court, then investing into these experiences will go a long way. So as a property manager that grew to over 70 properties across the US, what do I think about all of this? Well, I think that there's a lot of opportunity to be able to add on clients if you are interested in growing a co-host business. There's obviously going to be people that are getting into the space that don't want to do any of the work themselves. So this is the perfect opportunity if you want to be able to grow your co-hosting business. So subscribe to this channel if you want more Airbnb related content. If you want me to talk more about co-hosting, let me know in the comments down below what you'd like to see, and I can create more content around that.